Well, yeah, the volatility, I mean, just the last 3 or 4 days, you've seen, NASDAQ's now already in a bear market. Uh, how often do you see markets down 10, 12% in 2 days? So the volatility that we've seen in what you're calling the first 100 days has really picked up over the last week. And the danger to the volatility is that uh, you throw participants offside and into margin calls. And if you do that on a grand enough scale, if it's big enough and far reaching enough, you're going to hit somebody who's big that can't pay. And that will start off a daisy chain of derivative failures. There's over $2 quadrillion worth of derivatives outstanding, completely dwarfs the financial system, completely dwarfs all treasuries and all sovereign central banks on the planet. So the danger is that you get a derivatives player that becomes insolvent, and then it will spread like a wildfire from there. As far as advice, I mean, I view the financial system as a complete Ponzi scheme that's going to be taken down where, like I just talked about the derivative failures, but also the assets themselves are going to get wiped out in value. It's time to get out of the pool. That's, I guess, the best way to say it is, or get off the railroad tracks. And the best way to do that and hold capital, again, is through gold and silver because they cannot bankrupt. And the system itself is bankrupting.
The biggest players that most people know by name, such as Warren Buffett and George Soros and others, seem to, in their foundations and in their companies, et cetera, having been raising, basically divesting of bank stocks, raising cash positions, et cetera, perhaps in anticipation of this. Do you know anything about who, and insiders selling 6-to-1 or 7-to-1 in major, even tech companies ahead of this? Can you give us kind of your high-level view of what the biggest players in the market have been doing, maybe perhaps over the past 2 quarters, and what that usually signifies when those kinds of actions happen?
I think you could go back to October, November of 22 when Russia's reserves were sequestered. From that day forward, you've seen hedge funds, you've seen foreign central banks, you've seen foreign treasuries, foreign sovereign hedge funds. They've been unloading gold day after day after day. And that's why if you look at a chart, it looks like a tractor in first gear, no big drops, no big spikes upward, but just, bottom left, top right. So I think that's been, a big hedge because understand that gold nor silver are issued by a government. If a country holds gold and they hold it in their own vault, there's no way that can be stolen from them. There's no way that can be sequestered like the 300 billion in Russian treasuries were sequestered. The world looked at that and they said, hey, if they can do it to Russia, they can do it to us. And the decision was made to buy less treasuries and buy more gold. Because of the ratio, and now we're close to 100-to-1, takes almost 100 ounces of silver to buy 1 ounce of gold. You want to concentrate on gold. I'm sorry, you want to concentrate on silver. You want 70% or more. If you're just starting out, you want 70% or more in silver versus gold. And then at a later date, as silver outperforms and the ratio comes down, then you look to start swapping silver into gold, and you'll end up with more gold ounces. When the ratio comes down to 50, 40, 30, as silver outperforms, you're buying cheaper gold with more expensive silver. So you end up with more ounces. As for the U.S. Mint lineage, the reasoning behind that is, for instance, I mean, if you buy a gold eagle today or you buy a silver eagle today, the mint is basically selling it to you through a broker conduit. It'd be really difficult for them to sell eagles to you today and then next week and say, oh, by the way, we're confiscating it. You have to sell it back. Now, could they do that with Maple Leafs or Krugerrands or bars or whatever? Yeah, they could do anything they want. And they could do something with U.S. mint lineage coin, but there will be lawsuits and there will be lag time where there would not be with foreign sovereigns or bars or generics. With silver, I believe it's hands down that you want to own junk silver. It's the smallest form, 14 dimes, roughly 14 dimes equals 1 ounce. So that's going to give you 14 barter transactions in a system down scenario versus one, whether it be a bar or a round or a foreign sovereign or even an eagle. So you want the smallest denomination. They are U.S. mint lineage. They're readily recognizable. They really can't be counterfeited because junk can't be shiny. Junk needs to look like crap. It needs to look like it's been used because it was used. And when I said readily recognizable, as long as the coin says on it 1964 or earlier, you know it's a 90% silver content. So for silver, I think hands down, you want to do junk. Switching to gold, again, you want U.S. mint lineage coin. It's much more likely that gold would be confiscated than silver. And just to mention on potential confiscation, it's my opinion they won't go after individual holdings. It's far more likely, in my opinion, that they would nationalize mining operations. They'd get more gold faster doing that, and going door to door, there's going to be deaths on day one. But as far as gold, you want either eagles or buffaloes, or 333 gold, which are the Liberties and St. Gaudens. They're as cheap as I've ever seen them in relation to spot. I mean, you can buy, I don't know, an MS 62, 63 Lib or Saint for basically the same price as an eagle, or maybe even slightly less. So the pre-33 gold, which a lot of people shunned in past years because they had a 20 or 30% premium over spot. There virtually is no premium over spot, and now's the time to buy those. New people or people that I've conversed with over the years, the biggest question is when. When's it going to happen? When? And all I can say is open your eyes because it's happening right before your eyes.
So help draw the dots together for people when you say it's happening right before their eyes. One thing that comes to mind is the destruction of value of the dollar from where it was in 1913 at the foundation of the Fed, or in 1971 when Nixon stopped the convertibility of the dollar from gold, et cetera. The loss in purchasing power, and that's one that everybody can relate to. But what else do you mean when you say it's happening right before your eyes?
You could use a better date to use is the year 2000. I mean, gold was $270 an ounce. Now it's $3,000. So that's over a 10 bagger with no risk. And when I say no risk, gold can't go bankrupt. There's not too many assets that have been a 10 bagger since the year 2000. When I say open your eyes, I mean, what's happened just over the last, 6 or 8 weeks? Just all the revelations coming from Doge of all the bullshit programs where money's gone. Money has gone, and when I say money, this is tax money, has gone into things that the public absolutely does not want and acts against the public itself by charter. So I mean, just the revelations of how crooked everything is, and this is something that you and I have talked about. Many in the alt media have talked about for years, how corrupt everything is, and we get trolled and poo-pooed, and you're just making stuff up as you go. Well, guess what? Just in the last 6 or 8 weeks, there's so many things out there that we knew were bad, but it turns out what was actually happening was worse than what we thought. So, that's just one thing. But if you look at what Doge has revealed, foreigners got to be looking at the United States and say, hey, wait a minute. I put my money there because I thought they were a safe haven and had a good rule of law, but they're all crooks. So I mean, that's an example right there.
So there you're talking about our dependence on foreign holders of the U.S. Treasury bonds for the stability of our bond market, et cetera. What happens if there's a greater, and we were told that just after Trump announced tariffs against all countries, including China, that China sold a huge swath of their U.S. Treasuries. Can you highlight what you know about that, about the risk that we face, that we, ordinary person, has zero control over, about the instability of our financial future based on foreign actions by foreign countries or foreign individuals as far as dollars are holding or treasury holding?
Right. Just understand that U.S. Treasuries are the foundation to the global financial system. They're the foundation for everything. And it used to be, years and years ago, gold was the foundation. Gold was a strong foundation. The problem with treasuries is that treasuries are issued in dollars. They contractually promise more dollars. And as the money supply gets printed and created, the dollar loses value. I mean, just the illustration, 270 gold to 3,000 gold, that's, the dollar since the year 2000 has lost 90% or more than 90% of its purchasing power. The danger is that foreigners completely shut down and say, we're not buying any more treasuries. Not only that, we're going to sell the treasuries we have. Well, who's the buyer going to be? The buyer could only be the Federal Reserve. So the buyer of existing treasuries and the lender to the treasury for new treasuries in order to deficit spend or cover the deficit, the danger is that what has been outright monetization becomes outright public monetization. In other words, the public and foreigners, that human beings will be able to see that the U.S. Treasury has limits to what they can borrow, and that limit boils down to whatever the Fed can buy and whatever the Fed can lend. And outright monetization, all you have to do is go back through history. Anytime a government monetizes, the currency goes away, the currency evaporates.